We have reached the final phase of the financial governance curriculum. The blueprints are executed, the property is built, and the systems are live. When the ribbon is cut and the first guests walk through the doors, the physical hotel is complete. However, the financial life cycle of the pre-opening project continues. To formally conclude the project, we must execute two final activities. The first is the first external audit. The second and absolute final step is the definitive closure of the pre-opening budget, or POB. During this phase, the Director of Finance has one overriding objective: delivering a clean, documented financial history of the entire pre-opening process. This history provides evidence that the control framework established in Module 1 operated according to the project's specifications. Without a successful audit and formal closeout, the property remains financially vulnerable, and the Director of Finance's mandate is incomplete. The timeline for the first external audit is strict, typically occurring within the first 12 months of live operation. The external auditors conducting this review are independent entities, engaged directly by the property owner or the lender to ensure objectivity. Their agenda is hyper-focused. They will scrutinize the pre-opening transactions and test the initial system setup that occurred before revenue started flowing. To satisfy this scrutiny, the DOF builds a tripartite defense framework. This dashboard organizes our evidence into three specific vectors: systems documentation, the balance sheet, and transaction testing. Each pillar isolates specific auditor scrutiny. If any pillar lacks proper documentation, the entire framework is compromised. Preparation relies on systematically categorizing existing data to withstand an aggressive external review. We activate the first pillar of the audit defense strategy, systems documentation. In this node structure, auditors require comprehensive files detailing the configuration of the general ledger. This includes presenting the complete chart of accounts, verifying that every financial category is accurately mapped and structurally sound. Next, auditors will request the standard operating procedure documents covering key recurring transactions. Specifically, they will evaluate the primary SOPs for the night audit, payroll, and accounts payable. The target of this specific documentation is proving design effectiveness, demonstrating that the logic of the system prevents errors by default. These blueprints demonstrate that the financial controls were engineered for total compliance before a single dollar was spent. This visualization represents the opening balance sheet reconciliation. The auditors apply mechanical scrutiny to ensure the assets and liabilities are balanced before operations begin. The auditors will focus on the accuracy of CapEx, or capital expenditure, capitalization. The accuracy of this CapEx data traces directly back to the capitalization principles established in Lesson 1.4. They will also require verification for the correct recognition of prepayments and early liabilities incurred during construction. Once verified, the asset and liability accounts are mechanically transitioned out of the temporary pre-opening budget. These transition accounts must map into the live operating general ledger without a single cent unaccounted for. A successful reconciliation here creates a firewall between the historical startup costs and the ongoing operational reality of the hotel. We activate the final audit pillar, transaction testing files. Auditors require immediate, frictionless access to full transaction documentation upon request. They will not test every line item. Instead, they strategically pull samples of high-value transactions to test the integrity of the purchasing pipeline. For every sampled transaction, the DOF must provide complete three-way match files, combining the purchase order, receiving report, and invoice into a single verification unit. This protocol is a direct application of the purchasing workflows mastered in Lesson 4.2. The primary targets for this testing will be large purchases of operating supplies and equipment, and furniture, fixtures, and equipment. While Pillar I proves the system was designed well, transaction testing proves the DOF executed those SOPs with total fidelity in the real world. With the external audit documentation secured, we move to the final internal act of the financial life cycle, the POB Closeout. This process is distinct from the preliminary final audit conducted in Lesson 4.5. This is the mechanical termination of the temporary accounts. After operations begin, immaterial balances often remain in the POB general ledger. In the active chart of accounts, these tiny residual balances are highlighted. These dust accounts cannot remain open. They must be written off. By zeroing out these accounts structurally, we clean the ledger. This action permanently removes the pre-opening accounts from the active chart of accounts. Clearing these immaterial balances prevents historical pre-opening data from impacting the live, ongoing financial performance metrics of the operating hotel. The structural zero-out of the POB is a formal accounting action. It requires strict authorization, not just a few keystrokes in the system. To process the zero-out, the team generates a formal POB write-off SOP document. This document mandates dual sign-off, requiring the signatures of both the Director of Finance and the property owner. This authorization culminates in the creation of the final artifact of the entire project, the final POB Closeout report. The DOF explicitly certifies this report, attaching their professional credibility to the accuracy of the final project data. Once certified, this document serves as the definitive financial history of the pre-opening project for all stakeholders and lenders. A perfectly clean external audit and a formalized closeout provide the final verification of the property's financial integrity, closing the Director of Finance's pre-opening mandate with documented precision.